हेलो एवरीवन। आज के इस वीडियो में हम लोग नवंबर 2020 की आरटीपी के एमसीक्यूज़ को डिस्कस करेंगे। जो हमारा पहला केस सिनेरियो बेस्ड एमसीक्यू है उसको करेंगे। स्टारकार्ट लिमिटेड owns and operates a web portal in the name of Starcart and is registered with the jurisdiction GST authorities in Delhi. As an electronic commerce operator, is liable to collect tax at source under Section 52 of the CGST Act. Starcart provides listing services to the various sellers for selling the goods to ultimate customers. Besides this, Starcart also sells its own product through the same web portal. For the listing service provided to sellers, Starcart charges a listing fees at the rate of 10% of the turnover of the goods sold by the seller in the particular month. Such listing fees recovered from the seller irrespective of any return of the goods sold throughout the Starcart. The customer can choose from a wide range of goods listed on the web portal and place an online order for goods. The payment is made by the customer through the payment gateway in online mode only. At the time of monthly settlement, Starcart makes the payment to the sellers after the adjusting the tax collection at source at the applicable rate. The invoice for the goods sold on Starcart is issued by the seller in the name of customer and tax is charged on the basis of location of the seller and customer. The goods are shipped directly by the seller to the customer and there is no responsibility of shipping the goods on the Starcart for the third-party sellers. In case of return of goods by the customer, the shipping is arranged by the Starcart. It charges a fees equivalent to 20% of the value of the goods returned as cancellation charges and refunds the balance amount to the customer. Further, 10% of the value of the goods returned is collected from the seller by the Starcart as handling charges for the return of the goods. In the month of January, Pulkit, a resident of Rajasthan, purchased following goods from Starcart. First, laptop having a value of Rs 50,000 and a printer having a value of Rs 10,000. Both the products are sold by the Infocom Limited, a seller listed on the Starcart and registered under GST in the Uttar Pradesh. In this case, they are going to charge IGST. Supplier is Infocom Limited, recipient is the Pulkit, and ECO, e-commerce operator, is the Starcart, and they are going to charge TCS in that case. Point number B, mobile phone having a value of Rs 30,000 sold by Starcart in its own capacity. They are selling this mobile phone at their own in its own capacity. They are going to charge the GST and going to pay the output tax liability. Point number C, CCTV camera systems have a value of Rs 1 lakh sold by Secure World, listed on a Starcart and registered under GST in the state of Gujarat. All the above transactions are exclusive of GST wherever applicable. There is no input tax credit balance as on 1st January for the Starcart, Infocom Limited and Secure World. GST is applicable in the aforesaid case scenario at the following rates unless otherwise specified. GST at the rate 9%, SG at the rate 9%, IGST is 18%. Basis the aforesaid case scenario, please answer the following question. We are reading the first question. The net tax liability, including the amount payable as tax collection at source after the set-off of credits, if any, of Starcart Limited for the month of January. Okay, first of all, there is a supply of a laptop and printer. In this case, supplier is a Infocom Limited and we are going to calculate the output tax liability of Starcart. In this transaction, they are only charging TCS, which is 60,000, 10% of 60,000. Okay. They are going to charging the listing fees of 10% first. So that is 60,000 multiplied by 10% is 60,000, 6,000. On 6,000 they are charging GST of 18%. So that comes to be 1,080 rupees. Second, they are charging TCS of total turnover of the Infocom Limited. That is 1% of the 60,000. 50,000 plus 10,000, 1% of 60,000. That is 600 rupees. So in case of Infocom Limited, Infocom Limited transactions, Starcard is paying 1680. Okay. In the second transaction, they are selling a mobile phone of rupees 30,000. So on 30,000, they are paying GST of 18%. That is comes to be 5,400. Point number 3, CCTV camera systems have a value of rupees 1 lakh. Sold by Secure World, listed on Starcard and registered under GST in the state of Gujarat. So that is also similar transactions. So the total turnover is 1 lakh. 10% of 1 lakh is 10,000, and 1% of 10,000 is 1 lakh. 10% of the 1 lakh is 10,000, and 18% of the 10,000 is 1800 rupees, plus 1% of TCS on 1 lakh is 1,000 rupees. So their total tax liability is, output tax liability is 1680 plus 5400 plus 1800 plus 1000. So their net output tax liability is 9,880 because there is no input tax credited in their balance. So the correct answer of the first question is IGST 9,880 rupees. Okay. Question number 2. What is the net tax liability of Infocom Limited and Secure World for the month of Jan? Okay. So total sales value of the Infocom Limited is 60,000, and 18% of the 16,000 is 10,800, and they already paid TCS. They already paid TCS of rupees 600. That amount we are going to deduct from 10,800. That comes 10,200, and they also paid tax on the listing fees that is available in the ITC of the Infocom. So the listing fees charged is 1,080 rupees, 1080. So the net tax liability of Infocom Limited is 10,800 minus 1080 minus 1,000, that is 9,120. Okay. And in case of Secure World, they sold 1 lakh rupees of amount. So 1 lakh minus 1 lakh का 18%, 18,000 में उन्होंने TCS पे कर चुके हैं 1% का. So the TCS is charged 1,000, and they also paid tax on listing fees, which is 1,800. So their net tax liability is 15,200. The correct answer is C, IGST 9,120, and IGST is rupees 15,200. So the correct answer is C in case of second question. And the first question, the correct answer is D, IGST 9,880. Now the question number 3. In case of, it is assumed that Secure World turnover does not exceed the threshold limit for obtaining the registration under applicable GST law. So the assumption of Secure World is not correct. Why? Because any person who wants to sell the product online on any ECO, so they need to get registered compulsory. They need to obtain the registration. So the correct answer is D. Secure World is required to obtain registration and shall be liable to pay tax on all taxable supplies made through Starcard on its own. Okay. Now the question number is 4. Assuming that the Pulkit returns the printer purchased from the Infocom Limited in the month of January, as per the return policy, Starcard charges 20% of the value of the printer as cancellation charges from Pulkit and 10% of the value of the printer as the handling charges. So the net tax liability of the Starcard in such scenario for the month of January would be what? So earlier in the first question, we calculated the total tax liability of the StarCart is 9,880, right? Now StarCart made total 3,000 rupees as a supply. How? Like the value of the printer, 20% they charge as a cancellation charges, which is 2,000 rupees, and and handling charges of 10% of 10,000, that is 1,000 rupees. So they earn 3,000 again. On 3,000 they need to pay 18% GST. 3,000 18% is 540. They need to pay 540 rupees more, and earlier they paid TCS on 10,000 rupees. So out of that all TCS is going to be returned. So that is 100 rupees, 1% of 10,000. So their net tax liability is 9880 plus 540 minus 100. That is their IGST is 10,320. So this is the revised net output tax liability of StarCart in such scenario. Okay, 10,320 payable as GST. Correct answer is C. Now question number 5. StarCart provides a free gift voucher worth rupees 2,000 to the Pulkit on 31st Jan, which can be redeemed against any purchase of goods made in the future on StarCart. The supply of the voucher in the hands of StarCart would become. So in this case, this voucher, the date is not ascertained, the product is also not ascertained. So this taxable supply is going to be taxable in the month in which such voucher is redeemed by the Pulkit. So the correct answer is B, because in this question they are not specifying in which month they are going to, or in which on which product they are going to provide the service on the service, right? So this is the question number 1 which we discussed here. In the next video we are going to discuss about second question. Thank you so much for watching this video.